The ECB, or the European Central Bank, discussed about increasing interest rates. The previous was 0.0%, the forecast was 0.25%, the actual is 0.50%. How do these fundamentals affect the market? How do they affect you as a trader? And how do they affect you as a citizen? Let's have a disclaimer, then we jump to the real thing. Do not trade with funds you cannot afford to lose. That is the disclaimer. Do not trade with funds that you cannot afford to lose. We've been talking about central banks since we started smart money concept, price action, and the other concepts. Why central banks? Let's first understand. Central bank chechi ekola etya ate lwaki olina otegeera. 1. Central bank yesalawo how much a liter of fuel gy'oteeka mu motoka yo will cost. Economy y'eggwanga etambudde etya. That is the central bank. Employment mu ggwanga eyimiridde etya. It all comes from the central bank. Then a central bank, it is a bank for all banks, or it is a bank for commercial banks. Let me say, for example, before a DFCU bw'eba eyagala kwewola, ejja kwewola from the central bank. Yewola etya the excess reserves. Yewola ku excess reserves. Reserves ezo banka zebeera nazo. Once the central bank has the excess reserves, it lowers its interest rates. Before we jump to the excess reserves, let me first give you an example. Let's say a nation is performing poorly. We are economics here. Economy y'eggwanga eri bubi. Let me say, for example, economy y'eggwanga eri bubi. With the excess reserves here, the central bank will lower its interest rate. Why do they lower the interest rate? They want to give you a buying power. They want to give you an opportunity to also own a lot of money could lower interest. If you want to start up a business, you borrow funds and you start up your business. What does this lead into? Low interest rates from central banks, excess reserves. What do they lead into? They lead into chenali inflation. Oba kye tuyita inflation. What is inflation? Inflation is too much money. Why is it too much money? It is too much money because central bank from its reserves yakuwa the lowest interest. Twala kakadde kamu osasule kamu n'emitwalo 2. That is fair enough. Twala kakadde kamu osasule kamu n'emitwalo 10 from the excess reserves. What are they doing? gwe bulijjo ayagala okugula emmotoka y'ekirooto kyo bakuwadde a buying power here. Interest rate entono. But when there is too much money, it leads into inflation. Nga tetunalaba bino ebirala, let's first talk about inflation. And why is inflation bad? People have buying power. People are buying every time and then. Tewakyaliwo okwegomba, tewakyaliwo obwavu. What does it lead into? It leads into, goods running out of stock. When people buy and buy and buy and buy, stores bankalu. Abasuubuzi balina ogenda China okusuubula, and shipment takes like a month or two. Abasigaziza obuntu obutono, they double the price because people have a lot of buying power compared to what? To the goods available in the market. That is what we call inflation. Inflation is too much money, but businesses double the price or they become expensive because of high demand. This was supposed to be high demand, not less demand. Because of high demand, goods very expensive. That is inflation. Sente nyingi, a lot of money, but ebintu ebyokugula tewali. Okay? Ebintu ebyokugula tewali. Things are running out of stock. The manufacturing sector will still move on with its work. Jukira sente zibadde nyingi, abantu ne bewola sente and they are producing ebintu. Let me say, for example, this factory, the manufacturing sector, is doing its job. They will double the price as well because there is high demand of goods. Okay, they will double the price kubanga waliwo high demand of goods. But again, what happens? Recession. Recession is when the government runs out of money. Which money? The excess reserves. Here, the interest rates. They will run out of money. That is recession here. Now what happens that we're in a recession? This means that the government runs out of money. This manufacturing sector might even end up closing. Lwaki teina sente za kusasula abakozi. Let's come back to the interest rate. You understand bulungi. Central bank ebadde ina excess reserves newola buli omu. The manufacturing sector nebiteekamu amaanyi. Nekozesa abakozi bangi, nekola ebintu bingi, but central bank runs out of the excess reserves. That one leads into recession here. Once this one happens, the manufacturing sector will lay off abakozi. Some of them will even close. Once they close, after laying off employees, they will even try so hard okukendeza ku bbeeyi y'ebintu. They will try so hard okukendeza ku bbeeyi ey'ebintu. The payroll here, let's come back to the payroll because we are looking at, I'm trying to explain to you what happens, what causes, that downtrend, that uptrend. Ezibeera ku gundi, those candles, daily candles, okulaba nga You have 20 candles, but zonas are black. You have 20 candles, but zonas are green. So the payroll here, if the manufacturing sector laid off abakozi, do you think people are going to be paid here? People are not going to be paid. Why are they not going to be paid? They are not going to be paid because tebaina mirimo. And where did it all start from? Excess reserves. They were all given out to lower interest rate. That's why people are unemployed. That is the NFP jolaba, ne jobless claims in the US and from other countries. Every time we look at fundamental analysis. The CPI here. Now, if you are unemployed, what do you think happens? The consumer price index. People are not consuming. People are not buying goods like they used to. Nga bakafuna chi, bakafuna sente nyingi. Because once the government runs out of money, it is finished. So even consumers are doing what? Are being affected. Then the economy does what? It drops. Economy egwa bubi. It drops. Why? People are not spending. Even the manufacturing sector shut down, it closed. So how does central bank recover from this whole thing here? They just come back to the interest rates. Ne bongera ki? Ne bongera ku interest rate. So let's come to the euro dollar. If I zoom out, you'll see that it's been a downtrend for almost how many years? For a long time. The dollar gained strength against the euro. The euro has been selling while the dollar buying. Botunulira bodde mabega, we saw that Europe or Eurozone yayongezeza ku interest rates. So what does this mean? Let's come back here. This is the same thing that happened with Europe. Low interest rates and netudda downtrend. But since they've decided to do this, because I want you to look at the forecast, I want you to look at the previous. Previous, you have a 0. But now the actual is 25%. Sorry, 0.50%. This means they are trying to recover from that downtrend. Olaba Euro USD traded to 99 cents. Kino kiba kitegeeza nti for you to get this means that 1 euro was costing 99 cents as a US. It had affected the economy. Ya Europe yongayo. So how do they recover from this? They will have to do what? To do the opposite of this. From a negative to at least positive. Chovolaba bakozechi, they decided to have at least 0.50% interest rate here, from 0 to 50, 0.50. So this is what you're going to do every time you trade. Before you jump to indicators, look at these things here. First understand the interest rate. Otegere inflation. Is it an inflation or a deflation? So higher interest rates lead to deflation. Deflation is the opposite of this one, of inflation here. Buli kyolaba wano, it is the opposite of when the interest rates are green. Okay, it is the opposite. So wano tulaba nti Europe or the Eurozone esazeewo okufuna interest rates weziti, we are about to see a reversal ku euro as a currency. Okay, euro as a currency, we are about to have an uptrend ku yongayo, simply because interest rates bazongezeza. That is how you look at these fundamentals. Every time you have a problem, just know we start with interest rates. So before you trade ngawaliwo inflation, so kolabe interest rates. Before you trade the manufacturing data, first look at inflation. Before you trade recession, first look at the manufacturing data. Before you trade the CPI, first look at your name, okay? That is how you're going to be good at analyzing the market. Not you chasing price, not you seeing something that has been selling for long and you keep selling the euro. No. Nakugamba fundamentals ezitambuza akatale. These ones here are just charts. Agamauli, that news is what moves the market. So here we are about to see a reversal. Ku euro. The euro is about to buy. Okay, the euro is about to buy. We're about to see green candles ku euro yongayo. I hope this was insightful. Let me stop this video from here.